The global financial landscape is on the brink of a significant transformation with the emergence of Central Bank Digital Currencies, or CBDCs. Imagine a world where physical cash is replaced by digital representations of a country's fiat currency, issued and regulated by its central bank. This shift could make transactions faster, more secure, and more efficient. Unlike traditional digital currencies like Bitcoin or Ethereum, CBDCs are centralized and backed by a country's central bank. They are digital representations of a country's fiat currency and leverage the same blockchain technology to create a secure and transparent system for digital transactions. They aim to combine the benefits of digital currencies, such as efficiency and traceability, with the stability and trust associated with traditional fiat currencies to ensure that every transaction is recorded and verifiable. However, unlike cryptocurrencies, which are decentralized and operate independently of central authorities, CBDCs are centralized, with central banks and governments retaining control over their issuance and circulation. The implications of this shift are far-reaching, with the potential to impact everything from financial inclusion and monetary policy to international trade and the future of finance itself. As central banks worldwide explore the possibilities of CBDCs, it is crucial to understand their potential benefits, risks, and the transformative impact they could have on our financial system. In this video, we will delve into the evolving world of CBDCs, exploring their implications for individuals, businesses, and the global economy. We will examine the motivations driving their development and provide a comprehensive overview of what CBDCs could mean for our financial future, as well as how it will challenge the current global financial hierarchy. While the concept of central bank digital currencies, or CBDCs, is relatively new, several countries are already leading the charge in their development and implementation, setting the stage for a new era in digital finance. China, with its digital yuan, stands out as a front-runner in this global race towards a digital currency future, showcasing its technological prowess and strategic foresight. The digital yuan, officially known as the ECNY, is a digital version of China's national currency, the renminbi. It is issued and regulated by the People's Bank of China, ensuring a stable and controlled rollout. Unlike cryptocurrencies like Bitcoin, which are decentralized and operate on public blockchains, the digital yuan is centralized. The People's Bank of China maintains complete control over its issuance and circulation, providing a stark contrast to the decentralized nature of most cryptocurrencies. China's motivations for developing the digital yuan are multifaceted. They range from enhancing control over its financial system to reducing reliance on the US dollar in international trade, thereby increasing its economic sovereignty. Beyond China, other countries are actively exploring the potential of CBDCs, recognizing their potential to revolutionize the financial sector. As of May 2024, 134 currency unions and countries are exploring the implementation of CBDCs, representing 98% of global GDP. The European Central Bank is researching a digital euro, aiming to modernize the Eurozone's financial infrastructure. Meanwhile, the Bank of England is developing its own digital pound, which will bring significant changes to the UK's financial system. In the Caribbean, the Bahamas has already launched its CBDC, the sand dollar, becoming one of the first countries to do so and setting a precedent for small nations. These early adopters highlight the growing global interest in CBDCs and their potential to reshape the financial landscape, offering new opportunities and challenges. The development and implementation of CBDCs are still in their early stages, and many questions remain unanswered. Issues such as privacy, security, and the impact on traditional banking systems are still being debated. However, the rapid progress made by countries like China underscores the transformative potential of this technology, hinting at a future where digital currencies could become the norm. As more nations join the CBDC race, we can expect to see a wave of innovation and experimentation in the coming years, shaping the future of money and finance on a global scale, and potentially redefining economic interactions worldwide. The pursuit of CBDCs by central banks worldwide is driven by a complex interplay of factors, each reflecting the evolving needs and challenges of the global financial system. One primary motivation is the desire to enhance financial inclusion, particularly in regions with limited access to traditional banking services. CBDCs could provide a more accessible and affordable means for individuals and businesses to participate in the formal economy, fostering economic growth and reducing inequality. Another key driver is the need to modernize and streamline existing payment systems. CBDCs have the potential to make transactions faster, cheaper, and more efficient, reducing the reliance on physical cash and lowering transaction costs. This could be particularly beneficial for cross-border payments, which are notoriously slow and expensive. Furthermore, central banks are increasingly concerned about the rise of cryptocurrencies and their potential to disrupt traditional financial systems. By issuing their own digital currencies, central banks aim to maintain control over monetary policy and ensure financial stability. CBDCs could also provide a counterbalance to the growing influence of private digital currencies, preserving the sovereignty of national currencies in the digital age. Now, how do CBDCs relate to cryptocurrencies? One might assume they are one and the same. They're both digital. Both represent a form of money. However, their core principles are fundamentally different. At the heart of the discussion surrounding CBDCs lies a fundamental distinction: their centralized nature in contrast to the decentralized nature of cryptocurrencies. This difference in architecture underpins their respective functionalities, benefits, and potential impact on the financial system. CBDCs, as the name suggests, are issued and controlled by central banks, giving governments direct oversight and control over their circulation and use. This centralized approach allows for greater control over monetary policy, as central banks can directly adjust interest rates and the money supply to manage inflation and stimulate economic growth. Cryptocurrencies, on the other hand, operate on decentralized networks, typically using blockchain technology, where no single entity, including governments or financial institutions, has control over the network. Transactions are validated and recorded on a public ledger, ensuring transparency and immutability. This decentralized nature is a key characteristic of cryptocurrencies. It's what makes them resistant to censorship and government interference, a key reason why they have gained popularity. In addition to the increased privacy, however, it also presents challenges, including volatility, scalability issues, and the potential to host illicit activities. The centralized nature of CBDCs and the decentralized nature of cryptocurrencies represent two fundamentally different approaches to digital money. Understanding these differences is crucial for assessing their respective benefits, risks, and potential impact on the future of finance. The big question now is, can CBDCs and cryptocurrencies share the stage in the evolving financial landscape? In some ways, CBDCs could be seen as the government's response to the rise of cryptocurrencies, a way to offer the benefits of digital currencies while retaining control over the monetary system. However, this could lead to competition, especially if governments begin to regulate or restrict the use of decentralized cryptocurrencies in favor of their own digital currencies. The emergence of CBDCs has sparked a debate about their potential impact on the existing cryptocurrency ecosystem, raising questions about their future interactions. Will CBDCs complement cryptocurrencies, fostering a more diverse and inclusive digital financial system? Or will they create new challenges? Will they emerge as competitors, potentially challenging the dominance of cryptocurrencies like Bitcoin and Ethereum? One perspective suggests that CBDCs could coexist with cryptocurrencies, each serving different needs and user preferences, creating a balanced ecosystem. CBDCs, with their stability and government backing, could appeal to users seeking a low-risk, everyday payment and savings option, providing a sense of security. Cryptocurrencies, on the other hand, could continue to attract users drawn to their decentralized nature and potential for investment and speculation, offering a different kind of financial freedom. However, others argue that the introduction of CBDCs could pose a threat to the adoption and growth of cryptocurrencies, potentially stifling innovation. The centralized nature of CBDCs could undermine the very principles that DeFi is built on, such as censorship resistance, privacy, and autonomy. The convenience and familiarity of a government-backed digital currency could make it a more attractive option for many users, potentially reducing the demand for cryptocurrencies in everyday transactions. Additionally, governments could implement regulations that hinder the use or adoption of cryptocurrencies, further solidifying the dominance of CBDCs in the financial market. The future relationship between CBDCs and cryptocurrencies remains uncertain, with many variables at play. It is likely that both forms of digital currency will continue to evolve and adapt, with their respective roles in the financial system shaped by factors such as government policies, technological advancements, and user adoption trends. The key question is whether these two forms of digital money can coexist, fostering a more diverse and inclusive financial system, or whether one will ultimately overshadow the other, leading to a new financial paradigm. While the potential benefits of CBDCs are significant, they also come with a host of risks and challenges. Privacy is perhaps the most pressing concern. Unlike cash transactions, which are anonymous, CBDC transactions will be fully traceable, giving governments and central banks a window into every aspect of your financial life. Then there's the issue of cybersecurity. As with any digital system, CBDCs will be vulnerable to hacking and cyber attacks. Ensuring the security of these digital currencies will be paramount, but even the most robust systems can be compromised. This raises questions about the safety of your assets in a world where money exists only in digital form. Finally, there's the potential for governments to use CBDCs as tools for monetary policy in ways that could directly affect citizens. For example, central banks could implement negative interest rates on CBDC holdings, effectively charging you for saving money. They could also impose restrictions on how or when your money can be spent, which could lead to concerns about financial freedom and autonomy. So, what does the future hold for CBDCs and cryptocurrencies? As more countries move towards adopting CBDCs, we're likely to see significant changes in how money is used and managed globally. CBDCs could become the standard for digital payments, replacing physical cash and even bank accounts. For cryptocurrencies and the DeFi space, the future is less certain. While CBDCs could coexist with cryptocurrencies, offering a regulated and stable option for digital payments, they could also threaten the decentralized nature of the crypto space. How DeFi platforms adapt to this new reality will be crucial in determining the future of decentralized finance. One thing is clear: the financial landscape is changing rapidly, and CBDCs are set to play a major role in that transformation. As we navigate this new world, staying informed and understanding the implications of these changes will be more important than ever. That's all for today's video. Thank you for tuning in to DeFiTactix, your gateway to the future of finance and technology. If you found this video helpful, don't forget to like and subscribe to our channel for weekly videos covering a range of topics, from decentralized finance and blockchain technology to cryptocurrencies, CBDCs, and beyond. We're here to help you navigate the rapidly evolving financial landscape with confidence. Until next time.